Let's take a look at an exercise today in which we're going to talk about a current liability, specifically your salaries and wages payable. This is the homework assignment that we have for this week. So with that, let's get started with the exercise. So here we are told that we have a company that produces whole grain foods such as breakfast cereals, frozen dinners, etc. Assume the payroll for the month of January is $500,000. This is our starting point, the $500,000. They tell us that the following withholdings and fringe benefits and payroll taxes apply. So when an employer has employees working, there are various liabilities that they incur relating to payroll. One is what they give the employee. The second part is all the taxes that have to be paid. Some are paid by the employee, some are paid by the employer. Then there are some fringe benefits. Fringe benefits means benefits that the employer is paying for the employee. In some cases, the employee may also pay some of it, which is very common. But here we are looking at a situation where only the employee is paying for it. And then the employer has to pay some additional taxes on payroll. So let's take a look at all of that. We're told that on this $500,000, federal and state taxes have already been withheld from the employee's paycheck, $135,000. So the employer has withheld this money and they have to give it to the government. Health insurance premiums to Blue Cross payable by the employer. So the employer is paying $13,000 a year to cover the employees. The employees don't pay for this health insurance. Contributions to retirement plan, again, paid only by the employer, $60,000. It's a really good employer we have over here so far. There are FICA taxes. This is Social Security and Medicare tax that add up to 7.65%. This tax has to be paid by the employer and the employee. So this 7.65% is only one part of it. So one part is paid by the employer, the other will be paid by the employee. And then the employer has also to pay federal and state unemployment taxes. So when you heard of all the people getting unemployment checks during the pandemic, that money has to come from somewhere. The government was giving that money, but it is funded by employers. The employers have to pay this tax so that in the future, if any of their employees have to collect unemployment checks, the money is available there. So let's continue the exercise. We are told to assume that Kashi has paid none of the withholdings or payroll taxes by the end of January. Record them as payables. So none of this is completed. We'll see how to complete it. And no employee cumulative wages exceed the relevant wage basis. What this means is this Social Security tax and Medicare tax is in two parts. The Social Security tax is each employee, and the employer has to pay only on the first, I say only kind of lightly, on the first 142,800 right now. Every year that number keeps going up. So if you're lucky enough to make more than 142,800, you don't have to pay Social Security tax on that extra amount you make. So if someone is rich and you're making $500,000, you pay only in the first 142,800. Medicare tax is paid on all wages, regardless of how much you make. So whether you make 5,000 or 5 million, Medicare tax has to be paid on all of it. Now here they're telling us none of our employees have gone above that amount. So we need to pay the full 7.65%. By we, I mean the employer and the employee. The unemployment tax also is paid only on the first $7,000 per employee. This tax is paid by the employer, but it's only on the first $7,000. Again, they're telling us none of our employees have exceeded that 7,000. Basically, they're telling us we're keeping the exercise as simple as possible. Okay, with that, let's get started. So I have to pay out my salaries now. So let's see how much I'm actually going to pay out. This amount I start with is $500,000. Salaries expense is $500,000. And this number is given to me. That's the starting point I have over here. Okay. Now, of this amount, we already withheld taxes. It's income tax payable. That money is not mine to keep. I'm the employer. I've withheld it from the employee. It's payable because I have to pay it to the government. So in my books, I have to recognize it as a liability. So this number was given to me in the problem, just like that $500,000. Now the next number, the FICA tax, the employee has to pay 7.65% of $500,000. So this number over here is the FICA taxes, $500,000, 7.65%. So I need to take out $38,250 from the employee's paycheck to give it to the government. So I already took out taxes, federal and state taxes. I need to take out social and Medicare taxes. Really, an employer should be doing that as they go along, not doing it at the very end. And finally, here is the salaries payable. So this is the amount that the employee is going to get. This is their net wages. So how do I come up with this number? This is the balancing figure in the journal entry. 500,000 was given to me. The 135 was given to me. 38,250, I calculated that number. It's $500,000 times 7.65%. The balance is what the check is for the employee. So January 31st or Feb 1st, I need to write out a check of $326,750 to my employees, and that's the amount I'm going to give it to them. So those poor saps, they thought they were getting 500,000. The check they're going to get is only $326,750. Well, let's continue with the problem. Now, the employer is paying them $500,000. Some went in taxes, but they paid $500,000. They're paying more, not just that. This is the employer. They have salaries expense, more of it. What more do they have? Well, they paid two benefits. Now, the benefits they paid is to Blue Cross. This is the health insurance company. They have to send out a check for $13,000. Where did I get that $13,000? Again, that was given to me in the problem, $13,000. I have agreed with the health insurance company that I'm covering my employees and I'm paying them $13,000. I'm paying Blue Cross $13,000 for my employees. I also pay for a retirement plan, and that amount again was given to me in the problem. So my salaries expense is another 73. So it was 500,000 plus 73,000. Well, I'm not done. I need to pay more taxes. Okay, so what else do I need to pay? I'm going to call this payroll tax expense. Now, this payroll tax expense, I, the employer, am paying. This is not coming out of my employee's paycheck. So there are two parts to it. First is that FICA. If you recall, what had I said? The employer and the employee pay. So this is the employee paying. Now I have to pay the exact same number. So this is the exact same number that was there in the first entry. So once again, the number you see over here, that's identical to this number. So what is the government getting for FICA, for Social Security and Medicare tax? They're getting 7.65 plus 7.65%. That's the total amount they're getting from the employer and the employee. And then the employer also has to pay that unemployment tax. Here we are told the federal and the state unemployment tax is 6.2%. So again, how are we calculating this number? $500,000 multiplied by 6.2% gives me $31,000. 500,000 times 6.2 gives me the $31,000. That's how much my unemployment tax is. Add these two numbers and I get 69,250. This is again now the balancing figure that we have. 38,250 plus 31,000, that's a balancing figure. So what do all these numbers represent over here for the employer? What's the total cost to the employer? For the month of January, their total cost is not the 500,000. We said the wages are 500,000, salaries and expenses, salaries and wages expenses 500,000. It's 500,000. They paid benefits on it and they have to pay taxes on it. So for the employer, the total cost is 642,250. All of these are obligations, the payables. They're current liabilities because typically they have to be paid off within about 30 days to actually 2 weeks to 3 months. So the payable to your employees, every 2 weeks, that paycheck has to be given to them. The monies that is paid to the outside vendors, that is a health insurance company, those are typically paid on a monthly basis. The taxes that have to be given to the government, depending on how large you are, those could be given on a quarterly basis, but they all meet the definition of current liabilities. This is a cost of doing business. So we need to kind of be a little compassionate towards the employers that are paying that are basically handing out the paychecks to the employees. So again, we've looked at salaries expense, employer provided benefits, and payroll taxes. In the exercise, look for the details in terms of what information has been given to you. This is a relatively straightforward exercise in that no one exceeded any limits, so we didn't have to worry about that. Once again, this is an important topic that is very relevant for all of us. For me, it's relevant as an employee that my employer pays my wages and covers my benefits, and certainly doesn't do anything to get me into trouble in that if the employer doesn't give these taxes to the government's going to come after me and my employer. Okay, so this kind of takes care of salaries and wages payable and the benefits and taxes that go with it. Hopefully this should help you work through your exercise, and you should be done fairly shortly.